All right, everybody. I think we are ready to get started. Welcome and thanks for joining us. I'm Mike Erdman, CEO of the Home Builders Association of Marion and Polk Counties here in Salem. And I want to thank everybody from around the state for joining us this afternoon for the webinar. A lot of folks on this call. I think we have about 450 folks that are registered for this. It kind of shows how much interest there is. You know, the significance of these assistance programs being made available through the SBA is really tremendous. And so as your Home Builders Association statewide, we want to make sure that you got access to the best information, the most timely information that we can get to you. And so to that end, we really have three excellent presenters today. Marty Golden is the Portland District Director with the U.S. Small Business Administration. And as the federal agency responsible for administering the program, he's really going to have firsthand information and just valuable insight. Also with Marty, we have Caleb Williams and Randy Sutton, both business attorneys with Saalfeld Griggs law firm here in Salem. And before I turn the presenter platform over to Dave Nielsen with the Portland Home Builders Association, just want to take care of a few housekeeping items for you. We believe that our speakers are going to go about 30 minutes, and we'll have the rest of the presentation available for Q&A. Keep in mind, of course, this act just passed a few days ago, and I think the guidance may have just come out yesterday. And so all of this is pretty new to everybody. And our speakers are going to do their best to answer all your questions, but there may be some information that we just don't know quite yet. To ask a question using Zoom, you'll see there is a Q&A feature. And so depending on whether you're on a Mac or a PC or perhaps on a mobile device, you should have a Q&A button somewhere around the perimeter. And so if you use that Q&A feature, you can actually ask questions of the presenters as we go along. And then in fact, if you see other folks' questions, you can actually upvote those if there's a question that you too would like to see addressed. So please use that feature. Remember though, that with over 400 folks on this call, it may be hard to get through all of your questions, but we'll certainly do our best in the hour that we've got. Secondly, we will have CCB education credit for those of you who are contractors. You'll have an hour's worth of credit. We'll have that emailed out to you here in the days to come. There'll be a webinar recording that we'll have available for you as well, either later today or maybe tomorrow morning. And so if you have others that you'd like to share this with, or perhaps if you get pulled away from the webinar and can't finish it, we'll have that recording available for all of you to see. And then finally, I just want to point out that, you know, I think we have this Zoom platform figured out fairly well. We did a dry run yesterday. But this is fairly new to all of us using these new platforms to get information across. So bear with us if we have some glitches as we try to figure out the cameras and the microphones and the screen sharing. So with that, I'm going to turn the presenter platform over to Dave Nielsen, and he'll take us from there.
Thank you, Mike, and welcome again, everyone. And again, on behalf of Metro Portland HBA, the Marion Polk HBA, and then the other HBAs around the state that have worked to promote this, we just want to thank everyone for participating on this. It has been, as the word has been used over and over again, unprecedented times, but what I would say is also been so good to see is the way that our collective HBAs have been working together, realizing that we all have limited resources and we're all working in different parts of the state that are impacting each other. And how can we collectively come together, as we typically do, but in times like this, it's even more important to support the industry. And that includes not only all the local HBAs, that help promote this program that the Salem HBA and our HBA here in Portland help put together, but also our state association and Mark Long and his team. Mark's only been on the job for about 3 months, and obviously it's been trial by fire, but he's doing an excellent job. And honestly, it just shows the value again of the federated structure we have, where all of you join it usually at the local level, but that membership also includes the state and national associations. And NHB, our national association, is doing a lot of heavy lifting on the federal stimulus packages and everything that's related to helping employers and businesses and our industry. And then our state association, our local HBAs are working hard at our respective levels as well too. And Mark and his team are doing a fabulous job. As you all know, it's a delicate balance in terms of keeping construction open right now and making sure that we're all doing our part to contain the spread of this virus. And that's, I think, the other thing I want to just share with everyone. It is absolutely critical. And if you're in other HBAs, hopefully you're getting the same information or similar information. But up in Portland, I know in Salem, I know and across the state, we have developed resource pages. We've got an excellent one on our website. If you go to hbapdx.org/COVID-19, We've got a whole host of resources there. Hopefully they're well organized and pretty easy to go through, regardless of whether you need the latest communications from us, whether you need information about the business side impacts and how you can get access to federal stimulus resources or state resources, whether it's information on job site safety and templates. And the state associations put together a training program. The last thing I want to mention is they put together a training program for job site safety. If we're going to keep construction open safely and do it well, we need to make sure that every single person in our industry understands what that looks like, especially on job sites. OSHA is going around checking job sites out. They've received a lot of consumer complaints, not necessarily just about construction, but certainly part of that is construction. Part of those are really large projects that don't really have as much to do with our industry, but we're only as strong as our weakest link. So we need everyone. And there has been a construction coalition that Mark and our state association have been a part of with the commercial and industrial and other contractors to make sure that we're all doing our part to have safe procedures. And I can't emphasize that enough. If we're going to keep construction open safely in this state, we've got to make sure everyone is there. So pass that information on, pass the training information on. It's free to everyone. They don't have to even be a member. We want to make sure everyone is following these procedures and guidelines. So look for that training program on our website or on the OHBA website. Contact your local HBA or contact our HBA or the Salem HBA if you need to. We can point you in those directions. It's at homebuildersuniversity.com. And when you go on there, just select the state of Oregon. I think there's 3 different states, and then you'll have access to that online safety training program and a whole host of other materials and support materials. So I just wanted to emphasize that, wanted to welcome everyone. Thank you all for attending and thank our presenters. And right now I'll turn it over to Caleb and Randy and Marty so they can take the presentation from there.
Thanks, Dave, and thanks, Mike. We're happy to be involved in this and be able to speak to the membership. We've got a short agenda and a couple of slides we'll kind of walk everyone through. The focus is going to be on the SBA loan programs available now through the CARES Act, which was just adopted and passed into law last week on Friday, I believe. Marty and I will be talking about those things, and then Randy will talk about the employee retention credit, which was also in the CARES Act. So please ask questions as you have them. We'll try to answer what we can. One of the reasons I think this is an important webinar is just because there's so much information out there right now. We're all getting a lot of information on the CARES Act, on the Paycheck Protection Program, on the employee retention credit, and it's really actually hard to distill it down and to an understandable amount of information. So what we hope to do today is to do that for you, provide you what we think is important for you to know and for your businesses to know as you're making decisions as to what type of programs you think might work for you. So the agenda here, if we can go to that first slide, Mike, is the first that we'll talk about the Paycheck Protection Program. We'll go through a couple of items there. The economic injury disaster loans that are currently available through the SBA, and then the employee retention credit. First on the Paycheck Protection Program, this was just in the next slide, please, Mike, if you would. This was just passed into law through the CARES Act. The goal here is to keep people employed. And so you'll see as we describe these terms and the eligibility, the goal of the federal government here is to help small businesses keep their employees. And so that's the borrowers are small businesses, and that includes nonprofit organizations, 501c3, veteran organizations with less than 500 employees. If you have more than 500 employees and you've got affiliated companies, there are some rules around that we won't go into today, but generally less than 500 employees, which I think is probably most of the people on this call. I think what's important to note is this isn't made available for everyone. I mean, a borrower must certify that the current economic uncertainty makes the loan necessary to fund your ongoing operations, and that the funds will be used to retain workers, pay rent, pay your mortgage interest, and pay utilities. It's not, if you are not seeing a dip in your revenue in your business, if you can keep all your employees based upon your current level of business, you really don't qualify for this. And I think some people aren't paying attention to that fact that if you are doing fine, and most of us aren't, most of us are feeling a hit from the coronavirus pandemic, but If you aren't feeling that hit and you're fortunate to businesses continue to be okay and you can keep all your employees without these funds, technically you're not eligible. The other item that must be certified, and there are probably a few other things as well, but these are the key ones, is that you have not received another loan to fund these purposes. So you can't double dip on these loans. I'm not sure if you want to add anything to that in terms of eligibility, Marty.
I'll just add, I'm not sure what's on your next slide, but I'll add a few other things.
Sure.
Again, thanks for having me today. My name is Marty Golden. I'm the district director for the Small Business Administration's Portland District Office, one of 68 district offices nationwide and the only one in Oregon. We cover the majority of the Oregon counties, plus 4 counties in Southwest Washington, which surrounds the Vancouver MSA for the most part. So as mentioned, we're going to be talking about the major SBA loan programs as a result of this coronavirus disaster. We're starting off with the payroll protection program, but we'll also be talking about the EIDL. The thing to keep about, so when we're talking about these two programs, I think the thing to keep in mind there is that they're designed for slightly different purposes. Both programs are there to help small businesses survive the coronavirus period of time as best as possible. The EIDL is primarily a loan program, although it does have a $10,000 forgivable loan. It's got a wider range of use of funds than the PPP does. The PPP is primarily a program that's designed to keep people on payroll. So that's the reason that this program was put into place. There is a 25% cushion above and beyond payroll, but the primary purpose is to either keep your employees on payroll or to have you rehire folks that have already been laid off. And so you can, for the PPP, you can go up to $10 million, and then you can, and that's based on 2 weeks of payroll plus 25%. So if your payroll is $100,000 a week, you would say $800,000 plus 25% of that. So that would be $1 million loan. You can apply for forgiveness of that loan if you keep those employees on the payroll and you don't pay them less. In other words, their compensation stays the same. It is capped at $100,000 compensation.
We do have a slide or two that will go over that as well. So just so you know, we'll get that coming up here momentarily.
Okay, so why don't I'll stop there and see what you have coming up, and then we can comment if necessary.
And you said, I think you said it was a week, 2 weeks pay. I think it's months, 2 months, isn't it? Plus 25%.
Yeah, it's 8 weeks, 2 months.
Yes. Okay.
Calculate it, but
For the forgiveness, yes. Okay, great. Yeah. The process here, and this is different from the EIDL, but the process here is you apply with your bank, an SBA approved lender is where the application is made through. And not all lenders are SBA approved, but there are a lot of them. And I'm advising my clients to go talk to your current bank and see if they're approved for the SBA loans. And then that would be the great place to start. The application form has already been submitted or prepared and distributed. So you can apply starting tomorrow, April 3rd. You can send your application to your bank. There are details still forthcoming on the documentation requirements and on other details. Again, this is very new, but you certainly should start the conversation with your lender if you believe you need one of these loans. I'm not sure what other forms, Marty. I mean, certainly loan documents are still yet to be developed. But do you have any idea on the timing of those types of documentation and when those will be ready?
Yes, so the application form has already been developed. In theory, the lending is supposed to start tomorrow, or not the lending, but the applications are supposed to start tomorrow. I can tell you that in the field, we do not yet have standard operating procedures. I don't know if there's been much communications with the details of this to the banks yet. So while we do have information saying it's going to start tomorrow, I'm a little skeptical that it actually will. So if you call up your bank and they don't have information or enough information, they won't be allowed. So we're doing our best to have it start April 3rd, and perhaps it will, but we'll have to see.
Marty and Caleb, I understand there's a cap on how much money is available, at least currently. Is that a concern as far as folks getting their applications in sooner rather than later?
Well, yeah, I mean, it's a limited time program. I think you can do it until June 30th. There's been $349 billion allocated for this. The expectation is that we're probably going to run out of money before June 30th. Now, it doesn't mean they can't allocate more money if Congress decides. I do think that it probably makes sense to try to be towards the beginning of the line, but still $350 billion is a lot of money. I have a feeling that the bigger gating factor is going to be how busy the banks are and everybody else in trying to get these things done, because it's effectively a first come, first serve type of program.
Yeah, and the banks themselves may have some limitations on how much they can loan out, depending on their covenants and their other ratios. So every bank's going to be a little bit different in what capacity it can take on.
Yeah, please be patient. Everything is happening extremely fast. The legislation only got passed Friday. Everybody's having to put in systems very quickly. The information that we had on the EIDLs, that the first systems we had up for taking online applications crashed hard, and it took about a week and a half to kind of get a much more productive portal open.
Correct, yes. Let's go to the next slide and talk about some of the key terms here. This is a very brief summary, but the loan amount is 250% of average monthly payroll. I wrote here in the last 12 months. I've heard maybe it's different than that. Maybe it's actually, from a February 19 to June 19 is the period you would be looking at. But it's 250% of average monthly payroll is how much you can borrow, up to $10 million. Most small businesses that we work with, you're probably not going to need $10 million, but it is that is the maximum available, and that does not include payroll above $100,000 annually. So there's a cap on how much payroll you can count towards that 250% number. That's how much you can borrow. It's repaid over a 2-year period of time. Interest rate is 0.5%, very favorable, of course. But these loans, again, may only be used for specific purposes: payroll, healthcare, rent, interest on mortgages, utilities. That's generally what you can use these for. Can't be used for buying supplies, buying pieces of equipment. Those uses are not, the loan proceeds are not eligible to be used for those things. One of the other great benefits here is there's no collateral or personal guarantee requirements. The federal government's guaranteeing that the banks will get paid 100% through the end of this year. And so it's very favorable to a borrower. And then, of course, there's this forgiveness piece. And it's caused some confusion, I think, how this works. My understanding of this is that the portion of the loan used for payroll and there's other expenses that are eligible during the 8 weeks following the funding of your loan are eligible to be forgiven, subject to a reduction for if you reduce your number of employees from what you had last year. So if you have fewer employees you're paying now than you had on the payroll last year, it's going to reduce the amount of your loan that's forgiven. It does not cover, you cannot have forgiveness of any payroll to employees who are paid over $100,000 a year. And
can I throw in on that? It's my understanding, correct me if I'm wrong, guys, but that up to 100,000. So if you have somebody who's compensated higher than 100,000, 100,000 of their normal comp can be applied. Is that correct? The portion of that person's compensation would be forgiven.
Yeah.
So somebody makes 150,000, 100,000 of that compensation paid to that person would be forgiven. And keep in mind, this is annualized. And so this is over 8 weeks. And so it's $100,000 a year of compensation, but it's, 8 weeks of that $100,000 salary. that's forgiven.
Correct. Yeah, that's correct.
There's also another 25%. So the forgiveness amount, the way the Department of Treasury is putting it, so as I mentioned, this is a set amount of funding, $349 billion. And so what they're telling us is that probably the amount forgiven will not exceed the actual 8 weeks of payroll plus an additional 25% that you may have used for the other purposes, which include rent, interest, and not accounts payable, but utilities.
Mm-hmm.
So there is an amount that'll be forgiven probably above that. And maybe if this program is not as well utilized as they expect, then they might have more money, but they're kind of guiding people towards this is probably going to be the maximum forgiven.
And just kind of the logistics of this, and again, correct me if I've gotten this wrong, but so the employer, a lot of folks have done layoffs, and you have until June 30th to rehire folks. And by rehire, I don't mean rehire those particular people. You have to bring your employee count up to where it was. So if you had 30 employees, what I'm advising folks is doing the layoffs. If you had 30 employees, then you want to have 30 employees as of June 30th. So if your loan proceeds come in, and I don't know what's realistic, but let's say they come in, May 1st, you can use, even though you haven't rehired folks, you can still apply, the wages you are paying to the folks you do have working, all go towards the forgivable portion of this, so long as you've rehired folks by June 30. So it's not like you have to rehire everyone as soon as the money comes in. Is that your understanding?
I don't actually have good guidance on that. You may have looked into some more detailed things that I have available, but the point of it is that you can rehire and get compensated for the people that you rehire. I'm not sure about the exact timing of when those rehires have to happen. And that sort of thing.
The other portion of this is that if you've reduced wages, you can't reduce wages more than 75% of what the employee's wage was. So if as of June 30th, you have folks that are getting paid less than 75% of what they were making before, that can also essentially it reduces the amount that's forgiven. So the idea is you bring your census numbers are back at pre-layoff levels. Folks are getting paid approximately what they were paid before. That's the goal and sort of the condition of getting this forgiven. And to the extent you have a particular, particular employees you haven't rehired, so you haven't, let's say there's five people you laid off and you've only hired 2 back, or you've reduced wages for 3 or 4 people, that will count against you. It won't forfeit the whole forgiveness, but it does incrementally reduce the amount of forgiveness. Is that your understanding, Caleb?
Yes, that's my understanding. And let's remember that what we're talking about right now on these limitations are on the forgiveness portion of this program. So you can still get a loan with very favorable terms and use those loan proceeds to pay your employees, to pay rent and those eligible expenses. How much of that is forgiven is limited by some of these restrictions, but it's still a very favorable loan program, even if only a portion of those of your payroll is eligible for forgiveness.
That's right. Essentially, the government's paying your payroll and your rent or mortgage for at least 8 weeks is the goal, right?
Yeah, that's the intent, subject to those limitations. There was a question about, does this apply to independent contractors? And yes, the payroll, I think that's a broad enough definition. It includes payments to independent contractors. Is that your understanding, Marty?
I think you're right. Yeah.
Okay. The other key term here is that the loan payments are deferred for 6 months. Interest does accrue, but the loan payments are deferred for 6 months. So no payments are due for the 6-month period. Do we want to maybe look at a couple? I'm just going to go on to the EIDL program next, unless we want to answer a few more questions about the Paycheck Protection Program. I know there's a number that have come up.
I'm wondering if maybe we cover everything and then we'll go kind of loop back.
Okay, that's fine. That's fine. Let's talk about the economic injury disaster loans next. These are loans that are currently available. There are, the use of the loan proceeds is broader than the Paycheck Protection Program. It's other operating expenses, and those more typical business expenses can be paid with these loan proceeds. And these are directly through the SBA. There's a website there that's the initial application process through the SBA for these loans. A couple of key, so these loans, you do not go through your lender, you go directly through the SBA program. Key loan terms is loan amount is up to $2 million, repayment terms of 20 to 30 years. For businesses, it's 3.75% annual interest. For nonprofits, it's, I think, 2.75%. There is some collateral requirement. I think there's no personal guarantee required on loans under $200,000, but loans of more than that amount, there is a personal guarantee will be required, which is typical for SBA loans. And there's not this forgiveness element in this in these EIDLs. That's only for the
$10,000. That's forgivable.
Right. So this $10,000 advance, and Mark, do you want to maybe describe that?
So this is a new feature of this program. And by the way, I just want to back up to the first eligibility point. In general, businesses have to be small businesses. So there are different size standards depending on your North American Industry Classification Code. Mm-hmm. So you'd want to be a small business, and that's either revenue-based or employee-based, depending on the industry. I'm guessing the vast majority of you are small businesses, but I just wanted to make that point that those are not hard and fast rules. It just depends on your industry. In terms of the $10,000 advance, this is a new feature that started last week. And so the idea there is to try to get people $10,000 as quick as possible. And so once you put in your application, which is about a 20-minute process, the last question they ask you is, would you like to apply for the $10,000 loan, advanced loan? And the $10,000 will be a forgivable loan, and that'll be forgiven even if you don't qualify for the EIDL. So if you put in your application and somebody turns you down, say your credit score is extremely bad, and if you've already gotten the $10,000, you won't have to pay that back. And so the idea by that is it's supposed to be available into your bank. They're going to ask you for your bank routing number and your account, and the Treasury is going to deposit money into your account. Supposedly within 3 days. I don't think it's actually happening that fast yet, but that's the idea.
Yeah, and these loans are also available through the end of this year, isn't that right?
I know the disaster is through 12/31. I can't remember if this one cuts off at June 30th or it goes all the way to 12/31.
Okay, I thought yeah, maybe that just read the disaster designation has gone through the end of the year. But the other important point is you can't get one of these loans and use it to pay payroll and also get the Paycheck Protection Program loan and use it to pay payroll. You can't double dip on those. If you do have one of these loans, you can refinance it into a PPP. You just can't get both loans for the same purposes. Marty, what kind of activity are you seeing on these loans right now?
Enormous amount of activity. Everybody was after these. Now I think it's going to, once the PPP goes live, I think we're going to see a lot more activity there, and I expect the activity on the EIDLs to drop, maybe significantly. We'll have to see, because at the end of the day, the PPP's got a lot more forgivable portion than the EIDL does.
Right, right.
So,
one thing I wanted to add on the Paycheck Protection Program, so there's a really helpful FAQ. I'd give you the link, but it's just easier if you just Google Treasury Department Paycheck Protection Program. Just Google that. The Treasury Department has links. They have the link to the information for borrowers. They have a link for the application and that kind of thing, and a pretty concise summary of a lot of what we're covering.
Yeah, good idea, Randy. That's all I had on these, a brief summary of these loans. Unless Marty, you wanted to add anything else, we can turn it over to Randy.
I think that's a good summary. I can answer any questions people may have if I can.
This is Dave again. We do have some questions, and I've been trying to go through them because they've been flooding in and trying to see if there's some common themes. I think you've addressed a few of them. Kind of the can you apply for the EIDL as well as the paycheck protection? And yes, you can, but you can't use them for the same purposes. I think that was answered. A couple other questions on here have to do with what the loans can be used for. And so if you're able to, and I realize you might not have this information yet, but does an owner's salary count? We know that there's limits that you can't count more than $100,000 of any individual person's salary, but does an owner's salary count? What about if you've been paying people overtime? What is used as the basis for whether there's a salary reduction? Let's say someone has been 10 or 20% overtime and now you just got them working regular time, or maybe you cut down their hours a little bit. What counts as that? So any clarification in terms of business owner income and what has to be done in terms of overtime versus not that you guys might have?
Yeah, I think the if the business owner is an employee and getting wages, and that business owner's wages would qualify. The question on overtime, I think there's two measurements. One is for the loan amount available, and that really is a look to average payroll expenses, and then so that would include any overtime that was paid during the period when that's measured. The second is on the forgiveness side. I think that's based upon number of people, not what was paid. Is that your understanding?
So I think that if you have an employee that you've significantly reduced to salary, so below 75% of what they were making, then that can, as to that particular employee, you can lose forgiveness, and so you incrementally have lost some forgiveness. I don't know the answer to whether you factor in overtime. I wouldn't think you would. I would think it'd be based on their normal wage, not their overtime, because that's so variable what a person, when they work overtime and when they don't. But there aren't any regulations on this, so we're kind of winging it a little bit based on some educated guesses.
I think that they're going to be looking at the gross amount, so the number of employees you have, not an individual person. Mm-hmm. So if you reduce the number of employees that you employ, then you could lose forgivability. And if you cut overall salaries, the people who are going to be making that decision, the banks are going to get instructions on how to calculate that as we go. So it's still, we don't have a level of detail that some of you might be after in terms of how you calculate those.
Yeah, usually we have several months to kind of think through, and we read the regulations and everything is good. And right now we have a law, no regulations, no way of knowing how they interpret it. And it's only been around for less than a week.
And practically not at all.
Yep.
Right.
Well, I'll let you, I do have some more questions. I'm trying to go through them, but Randy, I think you were going to share a little more. So why don't we do that? And there might be a few more that come back to the previous topics. So I'm trying to go through them now. So I'll turn that over to you, Randy.
If I can answer Randy real quick there, I saw one question was about self-employed individuals. Yes, they are eligible for the PPP as well. Their applications are not accepted until April 10th. So, but self-employed individuals can also seek these loans.
Right.
Great. Thank you.
So Mike, if you could advance to the employee retention credit slides there, one more. So the employee retention credit is a completely different thing. And I do employment law. I'm not a tax guy, so bear with me on tax stuff. Usually I don't think about tax credits and that kind of thing, but a lot of my clients are wanting to know how these things work, so I've become a little more educated on them. So this isn't a loan, this is a tax credit. So it's a credit against your, the taxes the payroll taxes you're gonna owe the federal government, but it's a refundable tax credit. So to the extent you don't have taxes, you can refund the difference. The way this works, it's in the alternative to the Paycheck Protection Program. So you can't use both, you gotta pick one or the other. And I think, and this one applies to companies that have more than 500 employees. But the way this works is that you look at the credit is 50% of up to 10,000 in wages paid. So if someone is paid 10,000 in wages, you get a credit for 5,000. So you're getting a credit for half of that. half of that wage that you've paid, and it also includes health benefits. So for employers with 100 or fewer employees, it's all wages paid. So whether an employee is working or not working, the credit still applies. And for folks that are 100 or more employees, it only applies to wages paid to individuals that are not working. And so the $10,000 cap on wages is in total. So it's not per month or anything like that. It's the total credit you can get over a period of time. So employers are eligible for this in a couple of circumstances. One is that their operation is fully or partially suspended due to a government shutdown order. So for example, restaurants, let's say you're a restaurant that could have some takeout, that's a partial shutdown due to a government order. If you're a hairstylist, it's a total shutdown, that kind of thing. Given the stay in place orders that we have and some of the limitations on what we can do, it's not 100% clear to the extent businesses are still able to operate, but you can consider it kind of a partial shutdown. How much that will, how that will be sort of resolved, I'm not sure. Our office here, we're still busy, but nobody's here at the office, and things are not, as running smoothly as they could. Is that good enough? I don't know. But certainly for businesses that have a part of their, let's say you're doing residential work and you have guys that are in the house working, and then, so you're building new houses, but you also are doing some remodeling and you can't get in to do the remodel, so that might be a partial shutdown, so that kind of thing. The other way you qualify for this is if your gross receipts are down to 50% or below 50% of what they were in the same quarter of 19. And so if you have a significant slowdown, that's another way you're eligible. And so if you're eligible, then you have this, this tax credit that can apply. The exclusions is you don't, in this particular case, wages of owners who are at least a 50% owner are not eligible, and family members and extended aunts, uncles, and brothers and what have you. So it's a fairly extended family that's not eligible for this. The next slide, Dave, or next slide, Mike. Wanted to compare the two just so you can kind of see how these two work. So Paycheck Protection Program, imagine an employee earns $1,000 a week, and the kind of our slow period or shutdown is 10 weeks. Let's hope that it's not any longer than that. And the employee earns $1,000 a week. So under the Paycheck Protection Program, you've got 8 weeks of that employee's wage covered. So that's $8,000. Under the Employee Retention Credit, is half of the $10,000 you're going to be paying that employee over the 10-week period. So that's $5,000. The total employer outlay, so if you paid the employee $10,000 in wages under Paycheck Protection Program, you're out of pocket $2,000, and the 8 weeks that you're paying $1,000 a week were covered by the loan. Under the Employee Retention Credit, you're out $5,000 because it's only covering half. The other thing, the advantage of the Paycheck Protection Program is you're getting rent, mortgage, those payments are covered, and that's not applicable under the Employee Retention Credit. So for folks that qualify, I think the Paycheck Protection Program is a better way to go. But we wanted to talk about this other one because you may be hearing about it, and it's still an option.
Randy, when is the credit then realized? Is it on your next payroll tax?
Yeah, so my understanding of it is you're not waiting a year for the credit. You're and again, I'm not a tax guy, but I think maybe it's like a June sort of thing where you're going to, in fact, I think that they may allow you to withhold payment of taxes, kind of sort of funding it through that. Likewise, asking for an advance on the credit. So I think those are things that may happen. I don't know that those things have happened yet, but they're anticipated because it would be similar to other ways that the paid leave that was recently enacted, how that's being handled. So it's not like you have to wait, you front the money for a little bit, but not forever. That's all I have to say about the Employee Retention Credit. Do we want to go back through and loop around for questions?
Yeah, I think we'd definitely like to, I've been trying to scan through here, and part of the challenge is some of the questions were asked early. I think you guys have covered many of the things that people have been asking about. So I'm trying to see what still is out there. I've had a couple, and I think some of the questions are around, some people may have already had to make some layoffs. Some of them may not have work because they are shut down or mostly shut down. And so they're just kind of paying people to do nothing. But what, did you mention when the timing was in terms of, it said something about need to hire back by June 30th. So if people have already made some changes, how does that kind of work and structure it in terms of over the next 2 or 3 months? What are they using as your official payroll, especially if you might have seasonal workers that you only hire temporarily when you have enough worker capacity, but they're not really part of your core team? Any help or guidance on that?
As far as the structure of how, you know, again, you don't have to rehire immediately. So if you're rehiring by June 30th, you can use the funds to pay the folks who are working or the folks you want to bring back because you really need them, and then rehire others when your business kind of is back up and running by June 30th. I know that there is a test, and I think the U.S. Chamber has a good flow chart on this. I can't remember what the test is for seasonal. I don't know if you guys know that, but there is a different way that's looked at.
Yeah, seasonal is looked at differently. I think on the rehire, and I'm not sure, I can't think off the top of my head of what that seasonal measurement is, but on the rehire, my understanding from the Treasury guidance is that you have until June 30th to restore full-time employment for those that you've laid off or that have left between February 15th of 2020 and April 26th. So there's a period of time that we look back to, and if those are rehired, they will count towards what the payroll that can be forgiven.
Okay.
There's a great, really simple flow chart, simple, of course, in relative terms, considering how complex this is. But the U.S. Chamber has a really good one. Again, you probably Google it, U.S. Chamber Paycheck Protection Program, and it's got a great flow chart for walking folks through how this will work.
Yeah, and we've got on the HBA website, the COVID-19 page that I was mentioning earlier, we do have the, I don't know if it's that same U.S. Chamber resource that you're just referring to, Randy, but we've got a really nice 4-page fact summary that they laid out a few days ago that we've got linked on our site. We also have the information that you mentioned from the U.S. Treasury. That summary is on there. And then we got something from the National Federation of Independent Businesses, NFIB, that had a great kind of checklist that compared the EIDL loans side by side to the PPP loans and things like eligibility, loan amount, eligible expenses, all that. So we're going to get that up on our website as well too. I know some of the other HBAs may be doing the same thing, but anyone can access it off our site, whether you're a member or not. It's in a public area. So I just wanted to mention that. The application itself, we've got a copy of that again on our COVID-19 resource page. I saw one of the questions said that they had checked with their bank, and their bank said that they were going to have their own application different from what the SBA may have. Is that going to be an issue? Are there going to be different applications, or there's confusion there? And where else can people get the application as well?
So in terms of banks using their own form, as long as they get the information that the SBA wants, they may have the ability to do that. It's a pretty simple, the SBA form is a very simple form. I think that's available online, but I'm not 100% sure, but the banks ought to have them anyway. The application itself is not going to be holding anybody up. It's so fast that once you get a banker who is willing to work on a deal, just ask them for the application. It's like 2 pages, most of which is, you know, have you been a criminal? So there's very little information that's asked for it on that. There's certifications and instructions and Paperwork Reduction Act notices. In total, it's 4 pages, but it's like 1.5 pages of information, again, most of which has nothing to do with your business, really. So I wouldn't get overly concerned about the application. The tricky part is going to be finding a banker and a bank that's ready to do this. And again, because I was saying that, you know, we haven't even put out the SOPs yet. I think there's a massive amount of confusion, but you know, that'll get worked out in the next few days, next week. And we know there's a lot of people interested in doing it. So the trick is to be talking to your bank. The existing SBA lenders will be a little faster than people who are not SBA lenders yet. But the banks that want to do this that are not yet SBA lenders will hopefully get authority to do that very quickly.
Thank you.
I was running through questions. I don't know if we want to do any more questions or not. I ran through a couple here that I was going to cover if you guys want.
Absolutely, that'd be great. No, I think we can stay on till 2.
Okay.
If there are others that you feel you guys can answer, that'd be awesome.
So I've got one was, can it be used for workers' compensation expenses? And I don't believe that's the case. I think it has to be used for wages. And so to the extent someone is, you know, if they're working for you light duty, it would count, and you could use the wages that way. Is it better to keep employees on unemployment and save the loan for when work returns? Don't see the benefit of having people on staff that don't have active work to do. Yeah, it's to the extent you need people to work, bringing them back during this initial 8-week period is advantageous because anything you pay out will be forgiven. But you're not required to do that. Bring people back, pay them just to sit at home. That's not required.
Can I comment there?
Sure.
Yeah, so this is just my interpretation of it. I obviously don't have a line into the White House or the Congress, but the reason people are doing this, if you are working, you can afford your workers, then that's all good. They're getting paid and you have work for them, and hopefully you're making some money there. The purpose of this whole thing, in the PPP side anyway, in my opinion, is to keep people on the payroll even if you don't have work for them. You know, they don't want the entire country unemployed. So that effectively, if you see the way this was structured, it's a forgivable loan. They're paying you to keep people on the payroll, whether you have work for them or not.
Mm-hmm.
And so if you're only going to pay 5 people that are left, you can get that portion of the payroll forgiven. And I guess at the end of the day, if you're getting that money and you're still making money, then that's a net positive to you. I can see that. But if you hire back 15 people that you don't have work for, I think that's within the scope of what they're actually hoping for,
Mm-hmm.
really. They're saying, listen, we're going to pay you to keep people on payroll for the next 8 weeks.
Right.
And it may or may not get extended, but I think that's the purpose of the program, frankly.
Yeah, I think, and I agree with that, Marty, and that's a good point. I think I'm on the cynical employment, defense side, management side, employment lawyer perspective, and so I think I'd probably wired, to sort of think differently. That the one challenge is having folks, you're paying for them not to work and sort of sitting at home not doing anything, and there's certain disadvantages to that just from a sort of I don't know about morale, but just sort of in the future, like how will your workforce look and how will they work and that kind of thing. And my suggestion is if you can possibly find work for folks and keep them engaged in your company, but not just paid, for kind of sitting at home for a month or two, if you can help it.
And there's certainly a benefit to keeping people on if this thing does pass, that there's the virus and the stay-at-home orders pass, quicker than the worst case scenario. You want to be able to have those people on your ready to go, ready to get back to work.
Mm-hmm.
I see some questions on here, and I think there's just a lot of uncertainty in terms of whether at the end of the day these things would be forgivable or not. And people are trying to say, hey, is this going to be a loan, or how do I know for sure? And I realize you won't be able to answer all the questions on that because you're still trying to work through that. But for example, what if you have a couple of employees between now and June 30th quit for other reasons, and your payroll changes because of that? Or what if you've got some employed, but some you've laid off? And so my understanding is this isn't an all or nothing, that it depends on what % of your payroll that you keep on, and that it might be that some of what you have as a loan gets forgiven, some of it doesn't. But is there any comment on that? Because I think there's some concerns like, well, how do I know for sure? Because if I take this as a loan, I have to pay it back. My business is suffering. I'm not going to be able to do that. I need to have some assurance in terms of what part is going to be actually forgiven and what isn't.
I agree with you on the incremental percentage. And so let's say you don't bring several people back, that will reduce the forgiveness. And yeah, if a couple of people leave, there's attrition, they got laid off, they found some other opportunity, or they're doing something else with their lives, to have the 100% maximum forgiveness, you'll have to find someone else to hire, or you take a lower rate of forgiveness based on you couldn't get the census levels up.
Marty, is that your understanding too, that this isn't an all or nothing, that they'll kind of look at it, and however they look at it, we don't know for sure. But if you fall a little bit short, it's not like you're going to be completely ineligible from having it forgiven. You just might have a portion of it that's not forgiven.
Yeah, that's my understanding. The way the process apparently is going to work, according to the Treasury website anyway, is that you're going to present some documents about, I'll read it to you. Let's see. We're going to include documents that verify the number of full-time equivalent employees and pay, as well as the payments on eligible mortgage, lease, and utility obligations. You have to certify they're true and that they use the forgiveness amount to keep employees and make eligible mortgage, interest, rent, and utility payments. They have 60 days to make a decision on that. I understand, in business, you need to be really sure. I would be looking hard at the loan documents, but there's not going to be anybody here who's incentivized to look too hard into this at the end of the day. If you're doing the right thing, I think it's going to work out just fine. The bank, this is a 100% guaranteed loan by the bank or from the SBA to the bank. And there are not going to be, I cannot see a situation where there's going to be inspectors in the field, doing anything. Obviously the government has the ability to take legal action, and it's going to be a criminal offense if people commit fraud. And so I'm not telling anybody that commit fraud because that's obviously wrong. But this program was rolled out very quickly, and I don't think there's an incentive to basically roll this out and then renege on the promises that were made.
And again, these are very favorable loan terms. I mean, so some of it may be forgiven. It will be reduced to the extent you have a lower employee number of employees, but that's only the forgivable portion. The loan proceeds are still available at really very favorable rates if they're needed in order to get through this time.
Well, and I guess for some people, especially if they're not sure if it's going to be forgiven, for some of them, they may be looking at, well, why wouldn't I just give them the benefit of going on unemployment, especially with the enhanced benefits? I've heard some different numbers in terms of where that crosses the line, but because of the additional benefits that are there, I've heard that it's somewhere in the maybe $50,000 to $60,000 a year salary range, whereas kind of the break even, maybe it's a little more, maybe it's a little less, but somewhere in there. And so for some people, it may be more advantageous for them to go on unemployment. And especially if it's a business saying, well, I'm not sure if I'm going to have to pay that back or not. If it were a full grant, okay, but if I'm going to have to pay it back, why not just have them go on unemployment? That's kind of a comment more than a question, but if there's any thoughts or guidance that any of you have on that, I've seen that kind of up here a little bit as well too, as a common theme.
Yeah, I'm getting that question from my clients multiple times a day because they're trying to decide, do we lay off people? If we have laid off people, do we bring them back? Do we use the loan proceeds? And I guess that's kind of where I go back to if you really don't need them, don't need the work right now because you don't have the work, then maybe the unemployment benefit is the way to go. But if you can put them to work, if you only had the money to do so, certainly you want to use these loan funds to do that.
And then another question just is, where do people find a list of the banks? And Marty, I think that's what you're saying, that they're still working through that. So just kind of curious in terms of, is it just where they need to call their individual bank and ask them, or is there at some point going to be a list that is searchable by state or location or zip code or something that people could go to?
So if you go to the Portland District Office website, just type in, Google in Portland District Office, SBA, something like that. We have something called a resource guide. If I remember correctly, the link is kind of small, but you'll be able to find it, I think. And around page 30 of the resource guide is a list of what the lenders were a year ago. We don't have the current 2020 guide in that form yet. So that'll list with a degree of accuracy, not 100%, but who the banks are that are currently 7A lenders. So those are people you can start with, but you might ask your individual bank whether they're a 7A lender or whether they're going to get into this program, because we've gotten dozens of calls locally from banks and credit unions that want to participate in this. And so there's going to be a lot more people participating in this program than are our traditional lenders.
Okay.
Just to give you some information, they're going to make a fair amount of money. The banks are interested in this because they're getting paid 5% to process loans if they're under $350,000. So everybody's seeing, the banks are seeing a lot of money to be made here in addition to their normal interest in helping their small businesses.
I'm seeing a couple other questions on here, and we got about 5 more minutes before we'll wrap this up, but I want to try and get through a few more that seem to be percolating and asked more than once. One has to do with, again, the combination of the EIDL and the PPP. Someone had put a question about the applicant will not receive another loan under this program. I think you guys have addressed that. The EIDL is considered another loan under that program, but as long as you don't use that loan for payroll and you use that loan for other things, then you can access both of them. You can't just use them both for the same thing. I think you already covered that. I just want to confirm.
Yes, you can't use them for the same things. That's if you've got an EIDL loan, you're using that to pay payroll, rent, utilities, then you're not eligible to get a PPP loan for the same reason.
I would like to add something there. There's a lot of information going around that's coming from third parties. I have not seen the official guidance on how those can be combined. There's a possibility that if you take out loan money under the EIDL, that may be subtracted from the amount of money you can use that's forgiven on the PPP. I am telling everybody to be very careful when you're talking about, you're going to see loan documents. Pay attention to loan documents. Ask the loan officers on both sides of this, because there may be situations where you find yourself wishing you'd taken the PPP instead of the EIDL. So if I had really good guidance on that, I would tell you. I'm just telling people to be careful.
Okay. I see a number of questions here about self-employed individuals. I know we already talked about that for self-employed, as well as, which there are many in the building industry, small contractors that they basically set everything out, and it might just be, a couple or a couple family members or just a single person. So we know that they can't apply. I believe the answer is, number one, that you can't apply till April 10th if you're basically self-employed. But the question was, if you're self-employed and basically you pay yourself out of the profits you make, there's not really a payroll thing. Any guidance or thoughts in terms of how that works? And we do have a lot of small businesses that would probably fall in this category.
I don't have the answer to that. I don't know if you guys do.
I don't. I don't think. I mean, small self-employed individuals certainly can apply. I'm not sure yet how payroll for the self-employed individuals is measured if they're, for instance, just taking draws of profit out of the business and not cutting themselves a W-2.
My understanding is that if you've been drawing out of the business with regularity and you can show that would be eligible.
Okay.
Okay. And I think last, as we're wrapping up here, people are going to have more questions. Marty, I know you and the folks at the SBA are pretty overwhelmed right now. Someone had said, hey, they got a recording at the SBA. I don't know if it was your office or an office in general. They're not taking calls. So what's the best place for people to go to more information? Randy and Caleb, I know that's part of your business practices to do that. Is it talking to their banks? Is it possibly reaching out to one of you? Or if people have more questions about this, what are their resources to go to?
So there's a helpline, an 800 number that you can call in and talk to somebody on the loan side. We have people have been calling our office. We have my entire staff is basically answering the phone all day. If you call my office, you'll very likely get a call back within 12 to 24 hours, if not sooner. But we don't have a lot of the answers that you guys are probably looking for. So there's an 800 number. We've hired thousands of people to try to make that wait better. Let me give you that number right now. It's 800-659-2955. Again, that number is 800-659-2955. In terms of questions about the PPP program, I've told you everything that anybody in my office is going to be able to tell you right now. I would, talk to your banks and just give them some room and some patience. On the EIDL loan for the SBA, if you go to anywhere, sba.gov, sba.gov/disaster, you're going to see a banner at the top that says apply for assistance. It'll take you straight into an application where you can apply for the EIDL. So that's what I would recommend.
Marty, on if you kind of want to wait and see kind of how regulations play out and how, what's the best strategy, if folks apply for one or both, can they later on say, I've decided to go the other route? I mean, is it best to kind of apply for everything now, or what are you thinking on that?
So what I was telling people until recently is, if you apply for the EIDL, that's going to take a certain amount of time to get an answer on, whether it's 10 days or 15 days or 3 days. And so you don't have to take the money. And there'll be loan documents that you'll be able to look at and people that you can talk to in the meantime. So I don't see any downside in doing that, except I'm not sure how the fact that they've given this $10,000 advance loan is going to complicate that, because that might be that they're just going to drop the $10,000 in your account and then say, well, you've taken a loan. So I really don't know what to say about that yet, because I've not heard from the field anybody who's actually gotten the money yet and how that process worked. But even if that were to happen, it's only $10,000, which means you could still apply for the PPP, and maybe they'll hold the $10,000 against you, but that's not much money compared to what most people are going to be asking for. So I guess if it was me, I would, and you needed some money, you can wait if you don't need it right away. I think that's always good. Or you could drop in an EIDL application and just bide your time and see what happens, and or talk to your lender when they're ready about the PPP process.
Excellent.
That's
Well,
good.
that I think kind of wraps up our time. I'm going to turn it over to Mike to close here in just a second, but I just wanted to remind everyone two things again. Homebuildersuniversity.com is where you can go to for the online safety training program, job site safety training program. And we've got on our local Portland HBA website, that's hbapdx.org. And you can just go to that website. You'll see a big banner across the top that says COVID-19 resource page. You go there, and a lot of the information that they have talked about on here, plus a lot of other resources, is there. And that's open and welcome to anyone. Doesn't matter whether you're part of our HBA or another HBA or just in the industry and haven't been a part of an HBA. For those of you that aren't, maybe that you're on this call and you're not a member, this is one of the things that our HBAs do across the state, statewide, as well as our local HBAs. We're working hard for the industry. And if you're not a member, we would obviously love to have you join. We know that funding is tight right now. Most of your HBAs will have different options for that, but please consider that support, because we're out there supporting all of you and trying to keep the industry going, doing it safely, and connecting you to resources to keep you to keep everything running until we hopefully come through with this in the next few months. Mike, I'll turn it back over to you in case there's anything else you wanted to wrap up, and of course thank our panelists as well too.
Yeah, no, I just want to thank all of our panelists. I think it was great information. Thank all of you for coming and taking part. We will have a link to the recording sent out to you along with the CCB education credit. And before we wrap up, I just want to repeat the SBA helpline number, and that was 1-800-659-2955. And we will include that with the email that we follow up to all of you as well. So with that, we're going to wrap up the webinar. Thank you to the presenters. Thank you for everybody taking part, and take care. Stay safe.